Here we are. Well, good evening, ladies and gentlemen. Thank you for your attendance here with me today, this evening. And good morning to our friends in the southern lands, Australia, New Zealand, anywhere else south of the equator you may want to be. Yeah, what an exciting week it's been. We've had the Fed meeting, supposedly the most important meeting of the year. We've got a new Prime Minister in Australia. The contest for the next leader of the United States goes on, but you must all be long-distance runners over there getting excited about something that's over a year away. Peter, hi, in Auckland. Thanks very much. Audio's good. Who's here today? All of my usual friends. Let's see. Yep. Oh, Adrian Stern. Haven't seen you for a while, mate. I hope that little baby's growing well, and you're going to be a father again. Sue Landverian, my mate. Hello. Albert, good to see you. You've got a question for us about gold. Bill Dallywell. Bill's running Fractalian on stocks, of all things. I know nothing or very little about stocks, and Bill's a bit of an expert in Melbourne. He's seeing how that's going. He's appraising that for us, Bill. And Boyd, my friend from Canada. Yes, Boyd. Been having lots of fun with the gold market lately. Brian Baird, breakfast with Brian a couple of months ago. Gee, time goes quickly, Brian. Chase, nice to see you. Chase, yes, I'm still smoking, but I've taken your comments to heart. I agree with you. Got to give it up one way or the other. Craig Isler, lots of old friends. Daryl, my mate over in Mossman. Hope you're well. Have a beautiful bride as well. The lovely Chantel. We had great fun in Waiheke. Hope you're coming over for the next tutorial, Daryl, in Waiheke in early December. Will be even better with lots of new stuff for you guys to learn. Dan Farhan, welcome. My mate Chip, we've got to get in touch with me soon, mate. You and Opie, we've got to do our one-on-one follow up from the Los Angeles tutorial, which seems an awful long way away now, doesn't it? There's James Gillies. James is coming to Waiheke. James, I'm looking forward to meeting you. Janet, God, we've got a lot of people here today. John Barnes, Justin Woolley, I think he's coming to Waiheke as well. Marcel, my friend, I hope you're well up there in Canada, eh? That's great. Anyway, look, I can't, Matt Corbett, Matt and was at the Los Angeles tutorial. He's been worked for brokers, been a broker for many years, was absolutely staggered by it all, wasn't he? There's Mike, my Chicago mate at the tutorial. I've got to stop saying hello to everyone, but I'm awfully glad you're here. We've got just so much stuff to go through today. And our Pete Andrews. Hello, Pete. Pete was over here a few weeks ago, and we had a great lunch, didn't we? We went down to Coolangatta and had oysters and lobster. Oh, wasn't it good? Oh. There's Dick Brewster. Hello, mate. Gosh, I'd like to see everyone here. And, of course, Sage. The lovely Sage, the darling Sage. Yes, she never misses. And Tom Janovic. Hope we're going to get you going with the trading soon, Tom. Okay, so, yes, we're going to talk today about market selection. I'm going to talk to you about a whole lot more than that. But here we are. Let's see if all this is working. And your screen should be changing soon just to show you our compliance statements. Yeah, Peter enjoyed the lunch too. We had a good time. Pete Andrews, my mate in New Zealand. Here's our compliance statement, folks. You've got to read this stuff, take it seriously. Trading is very risky, particularly if you don't know what you're doing, which applies to almost everyone other than Danielcode clients. If you're interested in any of the stuff I'm going to show you today, you're very welcome to have a free trial. You just need to go to the Danielcode webpage at www.thedanielcode.com. Click on the free trial banner, follow the link, register a username and password, email Terry at support@thedanielcode.com. Tell him you'd like a free trial, and he'll switch you on for everything that we have for 31 days, so you can make up your own mind whether this is what you've been looking for. If it's not what you've been looking for, bad luck, because you're not going to find anything worthwhile anywhere else. Okay, so let's get out of that and let's start looking at charts, because we've got a ton of charts to look at. The first thing I want to do today is we've got a question in here. Yes. Let's see what's happening. This was 3 weeks ago, and we missed a webinar because of the holiday. And this is from a gentleman called Norbert Poots. Norbert, I hope you're with us today because your question was about the dollar Canadian cross and also about the Toronto, the Canadian share price index effectively. And what we're going to do is take a quick look at those. And this chart should have changed now, folks. This is the TSX 300. This is the Toronto index. And Norbert's question was this thing? What was he saying? I'm working so he gets. Difficult to assess the trend. It's stuck between a downtrend due to commodities, some lift. Well, here's the trend. Our problem always, Norbert, and you're not immune to it, nor is anyone else, is that we don't look at long-term charts often enough. So we like to start off anything we're looking at with our longer-term charts. This is the 24-day chart. And from there we can go down to a 12-day chart, a 6-day chart, and then a daily chart. If we go and swap through all of that and look at our daily chart, you can see that this market has been in a very long-term downtrend for a very long time. In fact, we can scrunch up our data a bit more. Now, remember, Norbert's question was 3 weeks ago, back in here somewhere. So it's had the bounce that all other markets have. But basically, some of these markets, Canadian market and the Australian share market in particular, and also their currencies, you see it more in their currencies, the Canadian, the loonie, as they call it, and the Australian dollar. These are captives of commodity cycles. These are commodity countries whose main exports are commodities. So they're going to be affected by the commodity cycles. And the best way we can see that is to move out again to our, let's start with our 24-day chart. And you can see, looking at this market, actually, it's still very strong. It's way up there, not far off its all-time highs. And it will be captive to the same forces as the Australian market. But let's have a look to put this in perspective. Let's have a look at the dollar Canadian. So you can see what's happening. We've got a lot of Canadian clients. This is the upside down version. When you see the Australian dollar, which I'm going to show you later, it's just straight down the page, down. Well, this is the other way. This isn't Canadian US. This is US Canadian. So it's inverted. And basically, this has been strengthening here. The dollar, US dollar, has been strengthening, or put another way, the Canadian's been weakening a long time. But the last move started from about 2011, and it's all one way. To put that in context, have a look at CR. This is the CRB index. This is the consumer index. This is a montage. There's a nice word, isn't it? A montage just means a collection of, or many of, various commodities that make this up. And you can see, here's your bull market, 02, all the way up, going mad. Here's the insanity around 2011. And since then, it's pulled back. And it's described by commentators as, a crash, a disaster, or everything else. Petrol's oil, at least, is down dramatically. Iron ore, which of course is and coal, huge exports from Australia, are down to nosebleed levels, but they're not really like everyone else. Commentators only look at shorter term charts because people have short attention spans. But here's the thing, that there's the 2011. This is a complete mimic of the previous chart I show you. There's the high of the commodity cycle boom, and now we've got this pullback. How dramatic is it? Well, we can measure that by taking our Danielcode trading tool and sticking on our retracement channel, and the first thing we can say is it's only retracing the minor swing. This is the minor swing. Let's have a look. We can't ever talk about trend without talking about what swing and what time cycle we're in. Now, this is a long-term 24-day chart, but this swing runs from this high down to this low. That's the minor swing. The major swing runs from this high in 2013 all the way down to, I don't think it was 2013, more likely 2011. I've got the wrong tool here. Here's your high, 2011. The major swing runs from there all the way down to 2001. So all it's doing so far is correcting the minor swing, and we can get a better idea of where that's going to settle by using our DC trading channel. But that's what's happening to the Canadian dollar and the Aussie dollar, and I suggest that this commodity super cycle, these are very long, very slow cycles, probably has a lot further to go. Which would be kind of nice to get some reality back into the world, but a lot of that also depends on the Fed's easy money policy. And as we know, yesterday the US Fed allowed interest rates to stay in the what they call the zero bound, which is effectively 0 to 0.25% for the 55th straight month. And despite all the hoopla that this was the day, this was the month, the hour that they were going to start to normalize interest rates, they haven't. And so it's been pushed off. But Fred's also very keen to keep people on edge perpetually. So they've got this technique of saying, well, we didn't do it this time, but gee, we're really, really thinking about it next time. So they're obviously trying to keep the inflationary expectations under control, but at the same time, of course, they're causing massive inflation with their loose money policies, and they're able to do that because effectively real inflation, household inflation, what you and I have to suffer, is not measured by official statistics, which take such things as anything that's sort of really price sensitive, like Australia from New Zealand, for example, where we have very, very expensive petrol at about $8 or $9 a gallon, is just not measured in the CPI, the Consumer Price Index, and there's an argument for that because, of course, most of it's tax. And it's expensive. Petrol's very expensive because it's government policy for it to be very expensive. In the mistaken belief that the way they sell this is to say, well, it's a great idea in Europe, and if we make petroleum really, really expensive, it will be a price signal and people will buy less of it, which will be good for the planet, which, of course, is just absolute rubbish. Nobody willingly buys an ounce more of petrol than they have to. You buy what you have to get where you got to go. So this is just another example of econo-babble, econo-speak. You can almost say anything and blame it on economists because there are enough of them to have different views about everything, none of which are particularly valid. But that's the whole inflation argument in a nutshell for you. So in answer to your question, Norbert, yes, the Canadian and the Aussie are being driven by the commodity super cycle, which has now ended, and we've got at least a decent correction going on, and that's what will happen there. Okay, let's have a look at some more interesting things. Perhaps I ought to come back to these because I want to talk to you today about market selection. Let's pull up a chart that's going to demonstrate this for you. This was the Toronto index. Look, it's basically its ups and downs, Norbert, will just mirror the S&P in the US. That's what it does. Huge amounts of US money invested in the Canadian market. And you can see the big crash spike down on the rally since pretty well mirrors the US markets in that extent. Let's have a look at this selection criteria I want to talk to you about. And I'm going to show you some markets, particularly I'm going to show you the currency markets, which have been pretty dormant of late. So let's have a look at this. I have done a number of tutorials with all of you on the Danielcode trading tool, the Danielcode trading channels. And what it is, it's a modified regression tool. It's this, if you have Trade Navigator, it's this little motif here, which says regression line / channel best fit. Now, that on itself is useless, but we adapt that so that it becomes a Danielcode trading channel. And there are some very specific rules about the Danielcode trading channel. As you can see, we've put this on here from this low. This is Canadian Japanese yen forex pairs, and we've run from the low on July the 8th through to capture this period. There are a number of basic rules. Now, there is a webinar wholly devoted to this topic. If you wanted to have a look and learn more about this, just go to the link at the Danielcode website that says videos, and you'll see it in there. But if you really want to learn more about this amazing tool, come to the tutorial at Waiheke. Those of you who don't know, Waiheke is an island in the Hauraki Gulf of New Zealand. It's just offshore from Auckland, which is the biggest city in New Zealand. And you'll fly into Auckland and have about a 20-minute ferry trip across to Waiheke Island, where we had a tutorial in December 2013. It was absolutely fantastic. It's the most beautiful beach, most beautiful island. Big surprise to you Americans, not many people there. And the end of the island we use, very, very few people, and not a lot of, no high rise. Lovely, low key, beautiful, beautiful place. And we had a most successful and terrifically enjoyable tutorial there. We're going to try and do the same thing in December, early December. So do keep that in mind and write to me if you're interested in coming. I'll just give you the date so you know. It's going to be, it's starting on a day earlier. We usually go Wednesday, Thursday, Friday. This year we're going a day earlier. The venue where we have this tutorial has got another commitment. So we'll be having our cocktail party on the evening of Monday, the 3rd of December. And we'll have teaching Tuesday, Wednesday, and half day Thursday. And in there we will combine some other activities and have a great deal of fun, as we always do. So put that in your diary, please. I'll be getting a document out at the beginning of next month. But those are the dates. Waiheke Island. Those of you who've done a tutorial, much of this stuff is new. A whole lot of it's new, actually. And we'd love to see you there again. Those of you that haven't done a tutorial, you're never going to be really good at this stuff until you've done a Danielcode tutorial. I can't be subtle about it. That's the reality. I've taught a lot of people over the years, and until you've done a tutorial, you're not going to make that giant step to the next level. So I hope to see you there. Folks, let me know if you're coming. Bill, Monday the 7th December. No, that's right. Monday the 7th of December. That evening, 6:30, we'll have our cocktail party. We have a bit of a welcome. It's a cocktail party. It's a bit fancy. We have a drink and a bit of a snack and get to see each other, get a chance to say hello to everyone else who's going to be at the tutorial, and make sure that you get to know everyone and you're ready to start off the next day. So that evening we have our welcome cocktail party, which is a few drinks, some snacks, say hello, and then teaching Tuesday, Wednesday, and half day Thursday. And as Chip Stevenson says, make sure to bring a hard hat just in case. Hope I'm going to see you down there, Chip, and your mate as well. I want to get you guys going. Okay. So back to where we were. This is the Danielcode trading channel, and the thing you should be looking at it for is the angle. In a trending market like we are here, take this piece of market, you can see that this Danielcode trading channel has a very fast move, a downward move, and that angle tells you really what the market's doing. And the problem with this stuff is, as you can see about here, when this market gets flat, that is when the Danielcode trading channel has less than, I can't really put a degree on this, Daryl Narain, Sage's husband in New Zealand, who's a very sharp analyst, always asks, what's the degree we're talking about? Is it 5 degrees, 10 degrees, 15 degrees? I don't really know. It's something you have to just work out for yourself and do it by eye. But the point is, when this thing starts going sideways, it will run almost exactly to the highs and lows of this Danielcode trading channel. Now, there are a number of rules about this. First of all, it's got to capture. This is a downtrend of sorts, very weak, but to be valid, it's got to capture this first push down, which it does, and it's got to make contact at one other point, which it does. And this is not a normal regression channel. It's a Danielcode trading channel. You have to set this distance. The standard deviation value is 1.593, which is the most important Danielcode number. You can use on some forex, it works better at 1.625, which is the alternate Danielcode number for markets. Should and do go to 1.593 or 0.593 all the time. 62.5 is the NFI number, or I don't know number. It's where traders will often put the market when there's no real momentum and they don't know what to do with it. So 1.593 is the setting. Now remember, you have to stick to these rules because the nature of this thing is that it's essentially a regression channel, and if you go on dragging it along, now you've broken the rules. You don't have the first push down captured, so that's no longer a valid Danielcode trading channel. It's become a regression channel, and a regression channel will fit any pattern, and that means it doesn't tell you anything. So you back this thing off until it's met our requirements of capturing the first push down. And another point, it tells you a great deal. It tells you pretty much where the market's going to go. Here's this attempted rally to the high, just failed. Down, catches itself on the lower one Danielcode standard deviation. Where's the rally going to go? Because this is a sideways market, it's only going to go to the top of the Danielcode trading channel, which it does once, twice, and then it falls away. We can see the same sort of pattern. We had the breakout, big push down, and then we have a rally, and what's happened since then? This is why there have been fewer. Here's your little run up here. Here's the close. You put your Danielcode trading channel on by about this stage. If you go back even a bit further, you can see that this thing's just going sideways. There's not sufficient angle on this Danielcode trading channel to give you a profitable trade. So, for example, this was a buy, very obviously a buy, made no money. This is probably a sell. Down it comes, makes no money because you're selling below this low, buying above that high. So typically in sideways markets, you can be correct. I can call a market every single turn probably better than 99% on daily charts. There's no mystery to Danielcode people about knowing how to find market turns. I can call you every turn on any market you want to show me and do it in advance, as we do every day with our TO3 and plus signals. But the point is, are you going to make a profit on the trade? And when markets are in this narrow range, which is the hallmark of the sideways consolidation, they don't move far enough for you to make a profit on the trade, excuse me, using daily bars, which is our criterion. So this is the main part of your selection criteria. Let me run through a few other markets that I had here to show you. Euro AUD was one, and same thing here. You can run a Danielcode trading channel across here, and you'll see this thing's just been going completely sideways. Now, doesn't mean you can't trade it. Yesterday or today, this evening, today for you folks in America, remember we're 10 hours ahead of you in Australia, so it's actually Friday, almost 11 o'clock in Friday morning down here, which is why I say yesterday. But for you today, we had a TO3 buy signal in this market, which was pretty nice. It was elected. You made some nice money. Thank you very much. So it's not that it's not tradable. It's just that it won't move terribly far. And up in here, for example, if you took this key reversal bar sell, it was valid. You made money, exit profit at close, but then you get this pattern that it's just running between these two upper and lower lines of the Danielcode trading channel. If you know that and you're trading it that way, that's fine. If you don't know that, you can be right and lose money, which is a frustrating state of affairs. Don't forget, whenever you're using Trade Navigator, when you're putting on these Danielcode trading channels, they do fill up the cache, C-A-C-H-E, not the lolly in your pocket, and eventually they'll start slipping off. When I teach people at tutorials how to use these Danielcode trading channels properly to forecast future price movement, they go nuts, and they put dozens and dozens of them on. We've had guys who put hundreds of them on daily, weekly, and monthly charts because they use properly, which is part of the teaching of the tutorial. They are an amazing tool that I invented many, many years ago. But if you get too many of them on, it will fill up the cache that stores them, and they'll start slipping off. They won't hold. The cache in Trade Navigator is not big enough to hold them all. See, my mate Chase is counting the number of times I light up a cigarette and telling me that, like me, he used to be a smoker. I still am. And it's something we've got to get rid of. Euro USD, I wanted to show you this because this is a slightly different situation. Here you have your trading channel down. Okay, so we're okay. Now it's not okay. The point I'm making is this push down. This is your first push down. You've got to hold that point and one other. And that's not happening now, so we've got to back it up. Now we're holding the first push down and one other. Now this is not very good. These two bars are too close together, but this is mainly science but part art. And if you make them too big, you lose the effect, which is that these markets will be dominated by these lines. As you can see, the rally up here. There's the close above it, 1 standard deviation. That's your first sign that the trend has changed. And you then go and put on a new trading channel running from the swing low or the closing low. Either will do. And I've stopped this, as you can see, at Wednesday's bar. And as a result of that, you can see what happened. You've had a key reversal bar right at 1 standard deviation. When it breaks 1 standard deviation, you go to 2 standard deviations from your drop-down menu, and you can see this market here pretty well pushed to the 2 standard deviation, gave you a key reversal bar. Now, key reversal bars in themselves are not important. They happen all the time, but if they happen at a known Danielcode number, as this has happened here, this is a three-dimensional way, if you like, of looking at charts because it's combining time and price, then they become important. So that is what created the plus buy today. In this market, Euro USD, very nice buy, nice to have the money, and that's how it works. So the first thing you should always be doing is putting these trading channel, USD JPY is the other one I want to show you, put these Danielcode trading channels on your charts. Here's a really good example of why we haven't been creating signals in this market lately. Because it's just been going sideways. And here's a rough estimate. This isn't a proper Danielcode trading channel, but it shows you what I'm talking about. Sometimes with these trading channels, if they're not technically correct, and this one isn't because it should start from the low or the closing low, which is this big bar here. Excuse me, that's going to distort the channel too much. but even when they're not technically correct, they give you a very, very good picture of what the market's doing. You see this market's going sideways. There's not sufficient angle on this Danielcode trading channel to make you think you want to be holding any of these trades, which means that where they're going to go to the top and the bottom of the trading channel, and that's exactly what they do. And this thing tops out here, bounces off the bottom channel, rallies 2 days to the median. The thicker line in the middle is the median. Down, sticks its head out below the 1 standard deviation, rallies back. Where's it going to go to? 1 standard deviation up. There was your sell signal. It's elected there. It's correct, but it doesn't make enough money to be a profitable trade. So stay away from these markets. We've got lots and lots of markets. When they're going sideways like this, I suggest that you do not trade them. I make an effort not to post signals on these markets that are obviously dormant, which is why lately there haven't been as many Forex signals as usual, because a lot of these markets have been running in small ranges, okay, and running sideways. So that was that. Let me move on. I've got a number of charts I wanted to show you. The first was gold. This is in no particular order. Those of you who saw our here's the note I wanted to bring to your attention. This is the forecasting from the fourth seal. This page should come up soon for you. It's changed now. You should be able to read this. And I have a young gentleman in Belgium, Frank de Barrea, who came to one of my tutorials in Taupo some years ago, got very interested in the fourth seal, particularly the forecasting of that, and he's made a couple of pretty amazing calls recently, one of which was for gold. So I've reproduced that for you. And of course, we had our buy on gold on Wednesday. We had a might have even started earlier than that. We had a plus buy for gold on Wednesday, which was elected, and it's running pretty well. Albert, I'm coming to your question right now about how long you're going to hold these trades for, you can see gold, and all of this stuff is in the fourth seal. If you'd like to subscribe to any of it, these are the markets that we cover in the fourth seal: DAX, S&P, crude oil, natural gas, copper, T-bonds, US dollar index, and gold. And you can see that, you will see that the charts, excuse me, we give you the 6-day chart and the longer term charts. You'll see exactly where the time cycles are to cause these things to turn. Let me show you one here. This is in fact gold, and this is last week. This was from Sunday, so this week's over, but you can see here are the charts, and they show you where the Danielcode time cycles are, and you can see these markets just all turning at these Danielcode time cycles. And here's the latest one here that showed, I guess this is the 6-day chart, showed you had a 44, very important. 44 is the time cycle of gold. If you don't understand why, you can go to the Danielcode website, click the articles tab, and have a look at 2 articles. One's called Masterclass 1, it's about time, and the other one's called Masterclass 2, Timing Gold. If you don't know about timing markets, and very few people do, that's where you can learn. It's all set out there for you. And if you'd like to come to a tutorial, I will teach you how to do this timing of market turns for yourself. But there's your typical Danielcode chart, timing chart, and it shows you well in advance when these markets are coming up. I'm not going to go any lower because there's a excuse me, a whole lot of stuff here about what Frank thinks this market's going to do. If you'd like to know about that, send Terry an email, and he'll be more than happy for you to subscribe to the fourth seal. This is Gold Weekly here, and this brings me to the point I want to make to you today, and I want to try and have a sensible conversation about your trading. And I don't think many of you appreciate just how good your trading can be. I made a comment earlier that I can teach you how to forecast every turn, every single turn in every market. Make that 98, 99% if you like. There's always the odd one that slips by, but basically I can show you how to catch every turn in every market. But the key to that is a thing that nobody pays enough attention to, and it's the Danielcode numbers. And it's these blue lines and these red and black lines that you see on all of our charts that make the Danielcode different to anything else in the world. They are unique. I invented them. I started discovering them 25 years ago, and I've refined them until about 10 or 12 years ago when we started publishing them and then released them to the public about 7 years ago. And these markets are all ruled by the Danielcode numbers. Now, you don't have to be a mathematician. You don't have to know anything about it because I do it all for you. But you have to be aware of why markets turn. And the main reason they turn is that they're at a Danielcode number. And I can tell you categorically, markets will not turn unless they're at a Danielcode number. And it doesn't matter how big or wild the move is. In fact, the more the volatility, the more accurate these numbers are. And it's a thing that not many of you pay a lot of attention to because we know which pages you go to. And if you don't want to look at the members' charts, that's your prerogative. But you're missing a great opportunity because markets, if I tell you markets will not turn except at a Danielcode number, you should be all over yourself being aware of what those numbers are. Here's a really simple opportunity to have a look. Down here, these little guys here are our retracement tools. This is Dan the Hedgehog, we call him. And this is the gold chart. This is a weekly chart. I don't know if many of you keep weekly charts. Those of you who are really serious traders probably do. So after this high here, we put on the pullback. This is the Danielcode retracement tool, which you all have access to. It's free to all members. And there's the low in the early September. And the low of that weekly bar was 1097.7. Danielcode retracement tool was at 1097.5. That's 2 ticks on a weekly chart. That's immensely accurate. That's as thick as a hair. And this happens all the time. And I'm going to bore you by taking you through some more of these charts so that you can get a feel for what I'm talking about because I really want to impress on you that if you're not, the unique value about the Danielcode are these numbers. And for the charts that we don't publish, I'm doing the numbers on all of them anyway, which is how we create the signals. But if you're not thinking about these Danielcode numbers, you're missing the one point about the Danielcode that's completely and utterly unique. It's these Danielcode ratios that work not only in price, but also in time. They're the same ratios on the other axis. And if you're not aware of that and really tuned into that, you're missing the greatest trading opportunity you can possibly have because if I can say to you categorically, markets will not turn anywhere except at a Danielcode number, then that is a unique proposition that nobody else can offer you. And if you don't believe that, you can go, because I know there are skeptics out there. I hear people say, oh, well, he only gives us the good examples, blah, 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 which of course is absolute rubbish. We don't do that sort of thing. But you're entitled to be cynical given what goes on with the media and the web generally. And you can satisfy yourself by going to the Danielcode website and clicking on our chart archives. Yes, that's how me, Sister Sage. Yeah, all markets turn at the Danielcode numbers. Yes, they do indeed. So I want to show you that. I've got some examples here that I want to run through. And it's vital, absolutely vital that that you get this stuff because you're not going to get it anywhere else. Nobody in the world has these Danielcode numbers. And I set them up for you somewhere here. Let me scroll through and find them, and we can start showing them to you now. These are in no particular order, but I want to run through a number of charts just to show you what markets do. You know, you look at a chart. If you don't have the Danielcode numbers, you have no concept of what or why markets are doing what they do. And that opens the place up for idiots to write Nobel Prize theses saying, oh, markets are random, which of course they're not. They're not random. They're controlled by the Danielcode. They will turn at the Danielcode numbers, and they will only turn at these numbers. There's 30,000 examples of that under the Chart Archives tab at the Danielcode website. So, I mean, if you're serious about being a good trader, suck this stuff in, take it as a gift, which is what it is, and understand that you can be aware of what markets do and what they're going to do by training your eye to see this stuff. So I'm going to run through these charts. Excuse me. Chase, that might be number 3 or 4. I'm going to run through these charts fairly quickly because there's a whole lot to see. And that was Aussie JPY. This is Aussie USD. Look what it does. It hits this number. There was your target recognition. Very often you'll see this market hit a number either at the bar high-low or on the close. Both are valid. Let me show you what these numbers are here. I just got to open the chart on another computer here so I can read them for you. This bar 916, that's the one we're on, had a high of 7,200 and closed at 71.90. The Danielcode blue line 71.94. Now you can go to the website, and these are with the last post. These were posted on Wednesday night. You can go to the website and see that these are the same charts that were posted on Wednesday night. I'm always amazed that people would think we go to all this trouble to tell you something that's not factually correct, but there's always some idiot that thinks that. So go to the website, have a look. The charts are there. You can check it out yourself. And we've got plenty of people who can tell you that. Albert, let me see if I can deal with this question moving. Can you say more about the filtering that you do on markets that are not moving? Does this mean the TO3 and plus markets that are listed each day are not complete because they've been filtered? Yeah, it does. Albert, I create the signals, and I don't put up every signal for every market because some of them I don't think are going to be worthwhile for you. And that's fed into the algorithm, or the computer program's a better word, that creates the bulk of these signals. One of the things that computer program does is it looks at the Danielcode trading channel, and if markets have got compressed and there's not sufficient angle to give us a good probability of a profitable trade, it will not create the signal. Sorry, so moving back here, we're looking for that bar closed at 71.90 against the Danielcode number of 71.94. In Forex, we allow 5-tick slippage, or a buffer, because don't forget that the prices in Forex are not as accurate as the prices in futures, because there's no central market, so we get a whole range of different prices depending on which platform you're using. 71.90 against 71.94 is about 0.0005%. That's very, very accurate. There's your target recognition. What happens the next day? This market runs up until it gets close to this Danielcode next blue line, does a key reversal bar. Okay, let's move on in no particular order. Here's copper. Look at this. Makes a little short-term high here, pulls back, hits the red line, up it goes. There's its high for this day at least. HG, let me see that, show you how accurate that is. I won't go mad on this stuff. You can work it out. That high is 249.30. The Danielcode numbers 249.20. And that's 2 ticks. This market works in 0.05. So plus or minus 2 ticks, unbelievable. Does it happen all the time? Yeah, it does. All the time, all the time, all the time. Let me just run through these quickly. Excuse me. Here's corn. This is the ones we don't publish. For this run up out of corn, we only had two targets, 394, 397. With the immediate targets, there's that high, straight onto the blue line. That caused the stop and reverse. Here's crude oil. Hit the big blue line, ignored this blue line on its way through. See, it just rushed straight through 47.80. And markets don't like doing that. It means it'll come back and test it from the other side. It comes down here, gets support, rallies up. Look at this bar here, which will be Wednesday's bar, 47.80, testing it from the other side. That's why I've left that second blue line on the members' charts, so you could see that. Here's one that doesn't work, because here's the S&P. So you look at this, you say, well, there's no setup bar there. That's not target recognition on Wednesday. So why did you post a sell signal for Thursday, which incidentally is valid Thursday and Friday? Well, sometimes we use what's called correlations, that we don't get the perfect setup we're looking for on one market, we get it on another. So here's the Russell, which is highly correlated with the S&P. In fact, all the US equity indices are so highly correlated that a signal in any one can be executed in any other. And here you can see with the Russell that you got the perfect setup to trigger a sell, and this might have to run through to even till Monday, but the high of Wednesday in the Russell was 1171.9, and there's the red line at 1172.2, 3 ticks away. That's your setup bar. You're going to get likely to get a reaction the next day. And that's why we had those signals there for you. Let's keep moving. I just want you to see this stuff. They're all the same. Euro JPY, where does it go? Straight closes at the Danielcode number. GBP JPY, where does it go? There's the blue line, 188.290. Where's that high? Close enough to 188.290. Where's the previous high? At the previous blue line, 187.33. Let's move on. GBP USD, same thing. Rushes up. Where's the high? 156.23. Here's gold. What are we going to see here? Same thing. Here's gold, finds the blue line, reverses, gets target recognition, perfect target recognition on the inside bar, and then 2 bars, 3 bars later, same thing. Off it goes. 1 bar up, 2 bars up. There's the blue line, 11.30. It closes at 11.30. It follows these Danielcode numbers perfectly. Your question, Albert, that I didn't answer was, are you going to hold this trade or not? That's up to you. With all these trades, you can exit first profitable close if you want to, or alternately, you can use our 2-bar trailing stop method, where you look at this fast stochastic. This is the Danielcode 533 stochastic. You use a 2-bar trailing stop, which means your stop stays under the lowest low of the last 2 completed bars. Don't try to do this while markets are trading. Wait till they've finished. And then when this market gets overbought, which would be the blue line, which is stock K, they're called stock K and stock D respectively. When that gets overbought, you're going to go to a 1-bar trailing stop. If you want to hold these trades longer than the day, that's the best thing to do. Sage is speaking to me to look for more on the DC website. Is it possible to put the blue line numbers with the posted blue line signals? Excuse me, not quite sure what you mean, Sage. I'll talk to you about that later. Give me a call on Skype when we're both free, and tell me what you need there. I'm sure we can work something out. Where else were we? I'm just trying to show you this stuff, the pattern. New Zealand USD. Why do you think it turned today? Up it goes, rally, 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 rally. Hits the red line, 64.43. You already had target recognition from Wednesday. Wednesday's highs right at that minor 63.28 Danielcode red line. So there's your target recognition. Something is likely to happen the next day. It's not a great trading opportunity, but that's why it turned. Here's silver. Same thing. There's your target recognition on Wednesday, 1491.5. The close is right on that number. Next day it's run up. It hasn't quite reached the 1530, but it's showing target recognition. Here's T-bonds. Same thing. We had a blue line buy signal today. That's why this thing made a nice trade, good lot of money. We had a blue line and a TO3. Why? This was target recognition. Okay, you see we had the blue lines there. You can check these charts. I'll show you in a minute to make sure everyone understands what I'm talking about. That close on Wednesday was 151.31, and the number we were looking for was 152. That's one tick. This thing trades in eights. 32 goes to the next number. It's one tick away from the blue line. The close of that bar. Fast stochastics oversold, slow stochastics oversold, big divergence on the CCI momentum indicator. Buy signal, put your buy there, up it goes, take your money, say thank you very much. US dollar index is the last one of these I'm going to show you. Look what this market does. Straight down to, everyone thought there was some drama yesterday. There wasn't any drama. This is what markets do all the time. The Fed said they're not raising interest rates. This market was going to go down anyway. 2-bar counter trend here and a big downtrend. 2-bar corrections only go 1 to 3 bars if the market's trending. Down it goes. Where did it go? 94.50 and a half. Okay, that was where the low was. And look where it closed, right at the Danielcode blue line, 94.660. So I hope I've driven you mad enough that you will now realize that this is the be-all and end-all of trading. If you don't have numerical numbers and targets on your chart, or someone like me who knows where they are and can create the signals, you are missing out on a great deal. In fact, you're never going to be a world-class trader until you understand that the Danielcode rules all markets. So I'm sorry for taking your time today with something that may have seemed a bit boring to most of you. A lot of you just want to know, where's the market going? What's it been doing? Blah, blah. All of that's good cocktail chatter, but of course, to buy the best cocktails, you need the money. And the way you make money is trading. There is no better way of making money legally that I'm aware of. And I can show you how to do all of this stuff for yourself. The final chart I wanted to show you here, this is US T-bonds going back to the Fed's decision. This is a 24-day chart. It's been running for years and years. I show it to you periodically. And you can see that every single turn on this chart has come at a Danielcode time cycle, which they're viewable well in advance, and that the long-term trend of this market is up. Remember that the T-bond chart is the inverse of its interest rate. So with the T-bond chart is going up, it means interest rates are going down. So that downward bias is still there as far as T-bonds are concerned. And our friends at the gold base get terribly excited that paper gold, COMEX gold is manipulated, for which there is no proof at all. But nobody remembers to say, oh, T-bonds and US debt instruments are manipulated when the Fed says openly that it's got 80 billion a month of QE. I think that's now down to 40 billion or so. Which is basically the government setting the price because they're the buyers of last resort. They are setting the price. It doesn't matter the amount of money. That's the sort of thing that journalists focus on, how much money they're committing to this program, because you wouldn't know. There are 100 other ways they can do it. The big question is, what's the price they're buying at? If there's no buyer, take out the Fed, where does this market actually go? So if the Fed's in there as a buyer, what is their number? Where are they buying? It's up to them entirely whether this market trends up or down, because if you took them out as the buyer of last resort, you get some real price action, and it would determine its true price, which I guess nobody wants to scare the horses. Okay, so that's all of that stuff. Let's click some closures here because you've been patient enough to sit through a whole lot of charts with me, and let's get rid of those. And let's have a quick look at where we're going with our other markets. Sage, not boring at all. I got to paint your nails. Beautiful. Okay, but there's no other way for me to show you. I put those charts into pictures today so you could see them more accurately. There's no way for me to get across to you other than to show you that these markets run to these Danielcode numbers all the time, all the time, all the time. And there is no substitute. If you don't know these numbers, or you don't have somebody telling you where these numbers are, and we do, we cover 20 markets that we do post all the charts for. I told you I would show you where these things were. That you'll see that you can go to in here. Let's have a look. There's the T-bond chart. Will open now. These are the members' charts. And I told you this is what happened on Wednesday. Well, there's the chart from Wednesday night. So you can go through all these charts and check what I've told you is completely accurate. I wanted to just quickly bring you up to date on what markets are doing with our longer term stuff. Let's have a look at what's happening in the SIX. This is Aussie US. We said that the next important number for this was 67.79. It's still heading towards there. Interestingly enough, it's bounced off another number. This is our really long-term 24-day cycle, which all of you have seen. I show it to you all the time. You see we had a number in here at 71.41. The close of the bar that ended on Monday was 71.32. 9 ticks difference, nothing on a chart. Remember, each of these bars is 24 trading days, which is pretty close to a month. In fact, most months have 22 trading days in them. So, for a monthly chart, how accurate is it? Yeah, pretty nice. And we're going to get a little rally now, but this downtrend is not over yet by a long way. Let's have a look what's happening in equities, because we're always interested in that. Find SPX. We try to use the index where we can. Here's our shorter term trading channel. This is the interim trading channel. This only runs from 2011. Those of you who have been following this will see, if we go to put this in context by looking at the major run, this is the one that runs from March 2009. We're just moved off a little bit there. Let me make that a bit better. We want to be just touching. See, we've held the first push out. We're at one other place. In fact, we're at 2, 3, 4, half a dozen other places, and we've captured this 2 standard deviation pullback in 2011 perfectly. So now, excuse me, we have had a close on the 12-day chart below 1 standard deviation, and that's the first sign of a change of trend. If you notice, all the way from March 2009, this has only happened once, twice, 3, 4, 5, 6, 7 times before in this whole run up has it closed below 1 standard deviation, and that is the first sign of a change in trend. A close below 2 standard deviations would confirm the trend has changed. It hasn't yet, so the trend remains up on this time frame at least. All right, folks, we've reached our hour. Thank you very much for your attention. Let me talk to you about some questions that have been raised here, and see what I can do to answer them. Love having questions. Great. Whack your questions into the questions box, and I'll certainly be happy to answer them. We've got here so and so. Any plans to bring back GMAG Pro, Mr. Neptune? Well, I teach it at the tutorials. It's we haven't had a great deal of success coding this stuff. We have real difficulty getting coding done in Trade Navigator. But if you'd like to learn GMAG Pro, I'd love to see you. Bring your Trident and come to Waiheke Island in December. I'll teach you how to do it by yourself. You'll never be hungry again. Great program. Okay, can I say more about that, Albert? I think I've answered that. Remind me, berate me, I can assure people. Here, Matt Corbett, my mate, says, as you continue to remind me, berate me, I can assure people that you don't fake this stuff. Good on you, Matty. You're a believer. Love to hear it. Adrian, wasn't today's program being about how to select which market to trade? Yes, Adrian. Avoid the ones that are in the sideways channel of the Danielcode trading channel that has no angle on it. That's the primary thing. Don't those markets are sleepy and they're not good trading opportunities. They're the ones to avoid. Sage, using coffee as an example, there are blue line signals posted on the TO3 but no chart to go. To look for more on the DC website, is it possible to put the blue line numbers with the posted blue line signals? I'm going to talk to you about that. Akshay, Nifty at the next webinar. Absolutely, Akshay. The Nifty's, gee whiz, it's trading signals on the Nifty have been absolutely fantastic lately. It's been great. I hope we're going to see you coming back to look at those signals, Akshay. Let me know. All right, folks, that's it for today. Thank you for your attention. Those of you who did the Los Angeles tutorial way back in May, I'm going to have another webinar just for you guys. Make sure you're all up to speed. A couple of you are not. The rest of you, I think, are all pretty happy chappies. And that'll be next week, and we'll have our normal fortnightly webinar on the Thursday fortnight. Anything you'd like covered, please email me. See if I can find S&P here. Usually has my email on it. It's Jay Needham. Here it is, jneedham@thedanielcode.com. jneedham@thedanielcode.com. Email me if there are any markets you'd particularly like me to talk about or any trading techniques that you're not getting. I expect that you're all making a great deal of money trading. Our trading has been fantastic pretty well all this year. If you're not, let me show you how to do it. It'd be my pleasure. Okay, thank you, folks. So you go the ABs. There's my mate Rob. Rob, wish I was with you having a big belly of booze down at Hamilton, but you go the ABs. I've got a real conundrum because, of course, now that I'm back in Australia, I have to watch these wallabies, which honestly are dreadful. It's not a culture over here, rugby, unfortunately. In New Zealand, the bloke I'm talking to is a Kiwi mate of mine. Rugby is the culture. It's the religion, and I love it being a rugby man. So I'm really looking forward to that, Rob. Good on you, mate. All right, fellas, all the best. Thank you for being with us, and I look forward to seeing you in a fortnight. And Marcel, salutations to you, my friend. Thank you for being with us today. Have a great weekend, folks. Bye-bye.